Good morning, traders. It is Monday, the 14th of September, 2015. It's 8:02 a.m. Chicago time. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight and weekend session um, doesn't really have much to offer. Um, we know that today and tomorrow are the Jewish holiday for the New Year. Uh, Shana Tova to our Jewish friends, of course. And the in other news, the Chinese markets are the lowest they've been in 3 weeks after weak industrial production and investment reports. Seeing a reaction there in China. Hasn't done much for our markets though. Apple is up 1% pre-market on a Recode slash Barron's reports that the iPhone pre-orders have exceeded expectations. I believe that came across for. Yeah, it says early data suggests iPhone 6s selling out in China on first day of pre-orders. That's causing that stock to pop. Confirms pre-orders for new iPhone 6s and 6s Plus were strong, on pace to exceed last year's first weekend iPhone pre-orders of 10 million units. 6s Plus online demand is exceptionally strong and beat the company forecast. So we're seeing Apple carrying the market here a little bit. But that's it for news. There's of course the um, reminder that this week is expiration week, and this Friday is quad witching Friday. So it's going to be an interesting week. Expiration week generally is not my favorite. Um, you have many reasons for participants to move positions over. There's also a tendency for the market not to auction properly because a lot of positions, options positions, and future hedges that have to be delta hedged. So there's a lot of participation on the future side, which is a derivative and a hedge instrument that might cause you might see a stock rally, and then you'll see the equity indices just sit in place. Um, and then quad witching Friday, of course, ends in the morning of Friday. And then to layer on top of that is this all important FOMC announcement expected on Thursday. So let's look at the week since it's Monday. Tomorrow, we're looking for UK CPI, PPI, RPI, the Eurozone employment trade balance, and the zoo expectation. And we're looking for Empire manufacturing, industrial production, and business inventories. On Wednesday, we're looking for UK ILO employment, the Eurozone CPI, and the US CPI, which again factor into the Fed meeting. Thursday, we're looking for retail sales in the UK. In Europe, we're looking for, um, I think it's consumer output. And the US current account, building permits, starts, housing starts, Philly Fed. That's all on Thursday. And then in the afternoon, we have FOMC rate, the FOMC rate decision, and the conference, the press conference that follows. So a lot's going to be contingent on and is going to be building up to that 1 o'clock decision, 1 o'clock Central on Thursday. So Monday, Tuesday, Wednesday, given that it's rollover week, just understand that the context is likely to be for a pretty choppy market. And then Friday, we have U.S. leading index, the U.S. leading index indicator. Today, not seeing much on the calendar. A few announcements already passed. As I said, the Chinese markets are the lowest in 3 weeks, with the industrial production and investment reports coming in worse than expected. And there's not much else on deck for today. So I expect today to be a fairly lazy trade. Let's switch screens here and look at what we've done, what we're trying to do, and what we're likely to do next. So again, let's start from the top. since the pop out of this prior balance back here, which occurred at the end of end of October through November, December, and January. We broke out higher right here on February 13th, and we basically sat sideways for a long, long time through the end of July. So February to the end of July has been marked with a pretty wide but in balance rotations for months and months on end, basically trading a 100-point range across a couple of expirations, across 3 expirations, and it's pretty intense when you look back at the in this part of the year. Because of the wide rotations, it seemed like there was a lot going on in the market, but really, when I zoom out here, you'll see that not much, not much at all. There's, since I've cut my composite back to February 6, 2014. That's the data that I'm tracking now. I'm not tracking anything before, just to reduce the load on my charts for creating these highly mathematical profiles. And you can see that we've moved up. We had a big dip down in October, and then we've rallied back up through November, balance, 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 pop in February, balance, 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 until the end of August, where we dropped, and now we're balance, 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 balance. So not much, this last drop in terms of where we are. Again, the whole point of this Trader Bite is setting up context for what we should expect for the day. So I have to spend time looking at this and talking about it to shape where we are. We have not seen the kind of volume and range that we had in August, so it makes it a little bit different. Even last October, we had the volume, but we did not have the range as you see here. There's something's changing, especially with crude where it is, with the U.S. dollar where it is. It's a little bit ominous to think that maybe this is just another pullback. It seems like there's more to it than that. However, when you look at the technical picture alone, and again, trading is not about opinion, it's about fact. It's trading what you see, not what you want to see or believe or expect or think. It's what we see. Overall, the market has not pulled back that far, has not really reversed anything yet, but it is struggling to climb higher, and it's struggling to go lower, and it's all because we're all standing by to see what this Fed does in the September meeting, which was where most analysts expected the Fed to make a change and to start raising rates. But given the results, given what has happened at the end of August, I seriously doubt anything is going to be done. I think they're gonna kick the can down the road, as I've been talking about all year. I just don't see the Fed raising rates in this environment at all, even without this August correction. I just don't see it with other central banks cutting rates and still implementing quantitative easing. The U.S. dollar is fairly strong as a result. Raising rates will just make the dollar even stronger, and that could really put a grinding halt to the U.S. economy, and they can't afford to do that, not with elections coming next year. Okay, so there's a lot playing here. I'm not an analyst. Watch CNBC for heavy opinions from highly credited guests. But I'm looking at this in the goal of assessing where we are and what we're trying to do. Let's send this to the back. Last week when we were here, we were trading in this consolidation zone, and we had kind of a funky looking profile. But the week before that, we had a nice split profile here at 31. In the September contract, it was about 41. It's currently 31. and we wanted to keep track of what it does above and below 31. So if I extend this out, you could see that the market has been fairly consistent with falling into this area, but then getting out of it, falling into this 31 area and getting out of it. So you could see here still the LVN is right beneath here, and the market just cannot stay below. Again, if it does get below, then 1350.14 is the target, and it's not able to do that. Friday's hypo 1 was for it to test a little bit higher and fall through the this composite LVN and push down to 1914, and it's just not able to do that. Friday showed some strength, and now we have a thicker profile, but we have the same thing. So what we've done now is we've built 3 distributions that we're currently trading. We have a beautiful taper on the low. If you look at the low, clearly the market's not participating at lower prices. You could see that as the market moved lower, there's less and less volume, which means less and less interest and participation by buyers and sellers, probably sellers, not wanting to sell so cheap. Buyers will be happy to gobble those prices up if they can get them. But there's a nice taper on the low, but the high looks a little bit thicker and looks somewhat incomplete. So when we look at the high, we see that there is a taper, but we have multiple tops that have been tested here but have not been taken out. So my immediate expectation is for this to come back up and to start walking its way and finally getting this 1985-75 area from way back in on that 21st of August, that drop on the 31st of August. Once we do, it's a fairly simple, there's a lot of repair to be done above, and it's a fairly simple run back into the 2037 area in the December contract. Again, everything I'm quoting here is December. I've been doing that since last Thursday. So that's how things are shaping up. We are actually stuck in value. That's why we have a box and we're looking at the volume in this area. We're stuck in this not value imbalance, and we're chopping around. This is going to likely continue today, tomorrow, Wednesday, and then we're likely to move out of this area as we get more clarity from the Fed on Thursday. So expect a fairly muted week, in my opinion. Again, it's just an opinion. So here's Friday. What was expected on Friday is we would open somewhere down here. We ended up opening right there. The expectation is for it to test higher, test towards that 39 area, 39.40 area. And then I expected sellers to come in and push to the low, then break lower and start moving towards the 1914, 1912 area. So that was the expectation for Friday. Push up somewhere along the line here. I expected it to turn, and it turned early, turned at 37.75, and then the expectation is for it to drop, pull back to the mid or so, chop around, and then move through the low and then target the 1912. It was not able to do that. We had a pretty decent rotation here where we could do something with it, but as soon as it pushed up and it just chopped around, and then we saw that there was a bid coming in, this big rotation here, 10.75, basically said, shorts are probably wrong, and expect a continuation move. There was a small pullback, a continuation move, and then it moved back to the mid and VWAP right here, and it ended up closing strong. So on Friday, we had a close that was quite strong. If we look at the if we look at how we closed above double the IV high, and we're in this thin zone from Thursday, and the expectation is for this to continue higher into the Sunday night session, which is what it did. So let's look at the Sunday night session. I know this is getting lengthy, but it's important to highlight how this thing is operating. So you can see here, we'll push to 1964 as soon as we open, because this auction stopped on Friday abruptly, right? Because the session ended and the auction is not complete. In other words, the market will continue to seek sellers by advertising higher and higher prices until it finds them. And because time ran out, it is more likely to continue seeking higher and higher prices. And it did. It pushed right into that point of control, the naked point of control above, and then it just sat sideways with a profile that's mostly balanced. And currently, it's trading a little bit lower, but overall, it's a lot stronger than where we were Friday. Friday's most valuable price right here at 43, and we're holding above it. There is a weak low here at the low, so I'm watching to see what kind of response we get. We're looking for, if it opens here, it'll be opening in range, inside of Friday's range, but outside of value. But Friday's value is not really true. It's a double distribution profile, so the value is not really valid. The value makes sense when you have a Gaussian profile, like something you'd see in a statistics book, where the population distribution is normal, and you take 70% or the first standard deviation, and that shows you that what's normal is in here, or what's value is in here. But when you have a profile that's like this, it's not really revealing value. So I'm looking for responsive selling on the open. Looking for responsive selling on the open, but I expect buyers to support this early on. So here we are opening. The overnight high is right in here, so we're templating the 9th or last Wednesday. So for me, it would seem like we would try to we would probably get responsive back to 43, and I expect it to chop around in here and walk itself back to 1960.75 after breaking the overnight low, to retest this most valuable price from Wednesday. That's the primary hypo. The secondary hypo is that it does continue to push. It finds initiative buyers, but if it does find initiative buyers early, it's likely to fail and fall back through the VPOC and down into this lower HVN down here, and this area that we've traded and retraded and traded and retraded, which represents the composite low volume node. I know that's a lot of info, but that sets you up for the week. Especially, it definitely sets you up for Monday, and you can see the logic in that approach. I've drawn a microcomposite here, and I'm going again. The microcomposite shows the most valuable price in these 3 days was 1939.75, and when I extend it to include Friday's business, it stays at 1939.75, and that's why I have this expectation, this hypo 2 expectation, for it to push down and through and take this back and then push all the way down into this 31 area, formerly 41 in the September contract. That is hypo 2, but the market's been pushing up, then the next day pushing down, then the next day pushing up. So you can see here, pushing up, pushing down, pushing up, and then closing down, and then pushing up. It's just been reversing back and forth, back and forth, back and forth. Anyway, I'll leave you with that. Good luck today, and I'll catch